Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. We're talking about a potentially apocalyptic scenario. Gold equities and COVID-19. Things are appalling. So this article is going to explain what's going on, why things are not adding up, and how something could be happening. So quite frankly, we are a little puzzled by the lack so far of severely adverse reaction by global equities to the worst downturns, perhaps for hundreds of years in global economies, and why precious metals, primarily gold, have remained relatively price static so far. All past logic suggests markets should be crashing and gold soaring, but this doesn't seem to be the case, at least not yet. Will all this change? Over time, we think it will, but it is certainly taking longer to come about than we had anticipated. So right now, gold and silver should be soaring. We should see a lot of economic turmoil, but things aren't there yet. Is it just yet? Is that the key word, is yet? I think so. I just think things are slowing down as the feds, the governments, the banks are trying to stay afloat. For example, the following questions are highlighted in Grant Williams' Things That Make You Go, newsletter, which follows the general theme of there being more unanswerable questions than sensible or satisfactory answers. Why are markets rallying when data is so universally appalling? Why the H are markets rallying so hard? Given the unemployment and economic activity during the Great Depression, what does last week's unemployment print at 14.7% mean for today's markets? Good question. Why doesn't the market seem to care about economic fundamentals anymore? Times are changing. The way you invest back in the day is much different than now. You need to learn how to adjust. Will economic fundamentals ever matter to the markets again? Does a sharp fall in consumer borrowing not matter? Is a huge fall in credit card debt similarly inconsequential? Is the decline in global manufacturing not worth worrying about? Why are equity and bond markets sending different signals, and which is correct? Will stocks catch down to earnings, or will earnings catch up to stocks? Is this strange disconnect idiosyncratic to U.S. markets? Are central banks more powerful than governments, judicial bodies, and especially market forces? Will any of this matter? To these, we might add our own, perhaps unanswerable precious metal specific questions as follows. Why is the gold price not booming given the parlous state of the global economy? When will the gold to silver ratio come down to historic levels, if ever? Will we see a mega correction in PGM prices? Where will gold price be in 1, 2, 5, or even 10 years' time? Definitely some good questions. In the 3 to 5 year, people are extremely bullish in precious metals, given the gold to silver ratio, given everything, the circumstances at bay. So, while Grant describes his listing as unanswered questions, at least by himself, he does interpret most of them with comments from expert sources, which try to make sense of some of them. But to this writer, some parallels with the Great Depression are perhaps the most relevant to the current economic situation. The Great Depression, which saw Wall Street prices fall to such an extent that they only managed to regain their 1929 highs by the early 1950s, is only matched, possibly even exceeded, by the current virus-inspired global economic meltdown. And the virus effects on global economy could well drag on for several years or more, dependent on how long the pandemic effects persist. It has not yet really impacted the so-called third world, and this sector is perhaps less well equipped to cope with it than most highly advanced economies, which is primarily struck to date. One potential parallel, which is well worth pointing out, was specifically noted in this newsletter. It noted the Dow Jones Industrial Index lost over half its value in the initial late fall of 1929. The first Wall Street crash, but it then rallied by 44% over the following 4-month period and saw unwary investors flood back into equities markets, picking up what they saw as stock bargains. But from its rebound high in March 1930, the Dow then fell back some 86% over the next 2 years before bottoming in June 1932. Could history be repeating itself here? It's only a matter of time. It is also perhaps worth noting that Warren Buffett, probably consistently the smartest investor of the current time, after seeing several major buying opportunities in the 2008-2009 Great Financial Crisis, which proved to be a very smart move, has publicly stated that he is sitting this latest downturn out given its likely prolonged duration. As one observer of the latest Berkshire Hathaway annual junket noted, Buffett seems to think that we are in for a generational bear market. He may yet invest, but only when hedge funds and institutions start unloading stocks at hugely depressed prices down the road. Meanwhile, his company will be sitting on its enormous cash pile, though thought to be around 130 billion, until he sees an end to the likely bear market if he lasts that long. He is 89 years old after all. As to precious metals, back in the 1930s, U.S. held gold was confiscated, then revalued as an aids, and that's the gold to silver ratio going from 16 to 1 to 75 to 1 from FDR. And this was reducing U.S. debt and supporting the dollar and the ability of the U.S. Federal Reserve to increase money supply during the Great Depression. The Federal Reserve Act of 1913 required 40% gold backing of Federal Reserve notes issued. By the late 1920s, the Federal Reserve had almost hit the limit of allowable credit in the form of Federal Reserve demand notes that could be backed by gold in its possession. We doubt this kind of procedure could be reenacted today, but it does also demonstrate the role gold has played over the years as a currency backing of last resort. Since 1971, when President Nixon took the American dollar away from its gold backing, gold no longer fulfills this particular role, but remains in the eyes of many around the world as the ultimate safe haven investment. What this should mean is that the economy is seen to deteriorate further, and successive unemployment statistics and second quarter economic forecasts suggest that the economy is moving ever further into recession/depression. Gold should start to come into its own currency as last resort. This should start to happen this year, although price rises yet to be suppressed by the big money, which could have an alternative motivation tied to the enormous potential losses if their short positions in the precious metals ever have to be reconciled. Gambling with money they didn't actually have was a downfall so many in the Great Depression years, and the same could be coming true now. Central banks are fighting an ever-continuing battle to try and soften the potential blows for investors, and that's that cushion. But they could prove to be as unsuccessful in this long term as King Canute's possibly apocryphal attempt to turn back the tide. If this pattern seen in the Great Depression is repeated, we should see the period of reckoning begin late Northern Hemisphere summer after the horrendous Q2 figures become apparent. The financial fallout could be apocalyptic, as could the dawning of the realization that there will be no quick or easy recovery. The time for stock bargain hunting may yet be a long time away. Safe haven investments like gold could come up to the fore, assuming investors have the money left to protect themselves and their families. As we've said before, we hope the terrible scenario does not play out in the extent we're contemplating here, but it is wise to be prepared in case it does. And that's definitely true. Preparedness is definitely the way to go. Gold and silver usually rise in times of economic turmoil. We don't wish that, but that's why we invest, because we're preparing against the worst, and we know the possibilities of it. A lot of people like to sweep it under the rug, pretend it's not going to happen, pretend it never will happen. But it has happened, and if history is any type of a repetition of itself, it's definitely going to happen. It's just happening at a slower rate than people were speculating. So I am curious what you think about this. The interesting part of the video is all the questions that have unanswerable questions, or all the questions that have unanswerable answers. But I like this one. When will the gold to silver ratio ever come down to historical levels, if ever? When? Right now, the ratio has to correct back down, and it's really interesting to speculate on if it might go even higher or what's going to cause silver to start outperforming gold. Another good question is, where will the price of gold be in 1, 2, 5, or even 10 years' time? A lot of people in the 3 to 5 year, even Jim Rogers, a millionaire investor, mentioned that if you're going to have any investment, stocks, bonds, cryptocurrency, Bitcoin, whatever, in the next 3 to 5 years, silver is the best investment to have in that time period, because of the gold to silver ratio, because of the given circumstances, because of silver demand booming in 5G technology and electric vehicles. Silver's the way to go. So anyways, I'm curious what you think about all this. Make sure to smash the like button. Make sure you subscribe. I'm posting daily videos. The link to this article will be in the description if you want to check it out yourself. I definitely enjoyed this article. I hope you guys enjoyed this video. If you thought it was educational, informational, or at least just entertaining, make sure to smash the like button. Anyways, I'll see you guys soon. This was Silver Slayer. Peace.